What is going on YouTube? It's Brendan for Market Makers. Guys, crazy day today. 8.5 on the CPI. One of my air conditioners went out. I'm in a back room. Not a lot of places to plug things in a house built in 1941. But so I want to get this video out for you because it's very important. But we need to talk about the CPI. I need to tie it to the marketplace because the market overall is very bullish. Half of trading is psychology. Powell is either a manipulative genius or he's Wile E. Coyote from the Looney Tunes, okay? Because whether through sheer dumb luck or cunning, he has convinced the market to rally into a tightening global economy. Absolutely mind-blowing. Guys, on this channel, we're playing chess. Lots of other people are playing checkers. We're going to tie in macro market cycles with actual technical analysis. So many channels do one or the other and to varying degrees of success, but we're putting it all together here so you guys can get the big picture, okay? Powell sounds dovish, but his minions are out there, even today, his minions are out there stating we're going to keep raising rates. Guys, look, the Fed has to choose. They're going to have to choose between a potentially hyperinflationary environment or an economic recession/depression. They're going to choose recession/depression because they feel like they can manage the downfall, what they're trying to do now. They're not going to choose hyperinflation because that's a very obvious thing, okay? So this Fed pivot, if you guys are watching this channel, wipe the Fed pivot out of your mind. That is not happening until something breaks in the marketplace. Right now, we are, I think, tied for the highest rates we've had since 2008. So this next rate hike in September will bring us to the highest rates we've had since 2008, beyond 2008, maybe back towards .com. Okay, so that's where we're at with rates. They need the rates to be as high as possible because when the market actually pulls down hard in a severe recession, which may not happen till 2023, they need to be able to stimulate the economy. The Fed has a very limited tool set. One of the key ways they do that is money printing and rate cuts. That's it, okay? That's all they can do. They need the rates to be higher. They do want to get that rate up to 3.5 to 4 by the end of the year. I don't even know if we can get that high without something breaking. So let's see what happens with that, guys. But the Fed pivot is not coming, and the market rally is providing the perfect cover for the Fed to raise rates. You're not even in a bear market anymore. The smart money knows this, guys. Retail does not know this. Retail has blinders on, bull market, bull market, bull market, largely led by the media because the media doesn't know what the hell's going on ever, okay? You don't believe me? Go listen to Jim Cramer on CNBC. Listen to some of the other talking heads. They have zero idea what's happening in the marketplace. The investment banks, you see some individual analysts that are out there warning. You have Wilson from Morgan Stanley. Bank of America just said the credit market is illiquid. Or the debt market is illiquid. So there's people out there, individual analysts warning. Zoltan Poznar from Credit Suisse is saying that the U.S. can choose between hyperinflation or depression. But overall, the market sentiment is bullish. And guys, what we're going to do is we're going to trade rallies and we're going to short tops. And we're going to look at this and see where these rallies will fade because we are on low volume divergent rallies pumping up to key resistance. Now, when will Brendan get bullish at market makers? When he stops talking about himself in the third person. But also when and if we flip, for instance, on the S&P, the broader market, the 200 daily here on the daily, the 200 moving average on the daily, and get above the 45 from the all-time high. If you can flip this and hold this and move up from this, I will be the first one to say, guys, got to look at upside targets because I'm agnostic about the markets. These are all trading vehicles for me. I don't care about any of them. I have no feelings about any of them. My feeling is greed and I want to make money, okay? So we're going to try to analyze this the best we can to make money. Guys, sorry, Bitcoiners, but we got to start off on the big markets, okay? Hierarchical structure. The bigger markets drive the smaller markets. The big market like the S&P, the money flow will come out of that into Bitcoin. It is a risk asset. If these markets keep going up, you'll see Bitcoin go up as well. So we're going to get to that chart in just a minute. But let's look at this on the S&P. S&P, I told you guys the last couple of days, has room to run to the 1618, 4271. You're at 4212. You could hit that this week. Your 200's just above it. Primary downtrend. I don't anticipate us flipping this and making a bullish structure and moving up beyond the 45 angle, okay? Could I be wrong? Absolutely. Do I think I'll be wrong? No, I do not. So I do think we're going to make our top and begin to roll. The volume is extremely low in all of these rallies. Money flow is good here. Bounced off your support cloud, moving back up. Probably going to top out right where you made that first top, okay? Here on the money flow, and the money flow end up making a double top. But let's look at the NASDAQ, guys. The NASDAQ also was bullish today, but what did it do? It pumped back up to our entry point here at peak Fibonacci resistance, the 1618 at 13,388. We'll see if this resistance hold. The 233 is above you in a super bullish trend. You could get to the 14,000, okay? But as you guys know, the NASDAQ, I'm the NASDAQ whisperer, the NASDAQ likes to make double tops at resistance. You already got your first top. If this does roll back down, this is your second top, the NASDAQ would look to move, as many of these indexes will, to their 50-day moving average. The hedge funds, the big banks, the basic TA people that understand a little bit of TA, and the robots that buy the marketplace, the algorithms, which is about 43% of the indice buying, they will look at the 50-day moving average as a possible inflection point rolling down from a top, okay? And this happens to line up beautifully with the 618 of our pattern, 12,182. So that is my primary target. If this does continue to make a top and roll over and fail, to come down to that 618, okay? So let's look at the, let's look at the volume. Well, we see the volume here, but let me show you this, guys, because I put a couple other volume indicators on here from Fractal Trade 15. So this is advanced volume. Again, this is your basic buying and selling candles. And of course, the clear or the white bars are extremely low volume. But look how low the volume is below the moving average. This is your larger volume structures for bigger moves in the market. Volume divergent rally. This is the Williams accumulation distribution line, flat. Okay, volume divergent rally. You see this across the marketplace. Yes, typically in sell-offs you can have more volume because of panic selling, because of fear trade, but then you do in buying, but you don't even have average bars for the buying. Okay, that's a very key concept to understand. It is volume divergent. So let's look at the Russell. The Russell also, I told you, has some room to rise to get to that 1997, the 1618. Russell at 1972. Once again, could easily hit this. Your 45's right here and start making a top and rolling over. This is the 233. If you flip the 200 up here and move up, guys, again, we'll look at upside targets because clearly the markets want to rally more. I do anticipate all of them making tops. Jump over to Bitcoin. Bitcoin here, looking at Bitcoin on the weekly, guys, again, you got to get above this candle, which is 24,666. Probably got to bring some holy water to get above this one, but you got to get above this candle. Let's take a wave projection from the weekly. Let's go to this previous swing low, up to that swing high, down to that swing low, and then look how beautifully the symmetry in the marketplace lines up. The 1618 at 28,966. Intersects your 45 angle from the all-time high, your 45 angle from the pandemic low. This is your most likely peak target from that volatility compression on the daily time frame. The most likely target, because again, the 1618 peak resistance with GAN, also the bottom of Wyckoff, okay? Lots of resistance factors here, but as I've showed you guys on the daily time frame, if you got super bullish, you could come up here to the 200, 233, maybe start getting some candles or a couple of wicks up here. It depends where this happens at, towards your 45 or the 2618. But this really is the top limit here, okay? For me anyways, 33K is really at max explosion you could get to. You're gonna have a lot of resistance on that weekly time frame. And again, guys, looking at this pattern, this volatility compression pattern, cup and handle pattern, I've been talking about this now for days, but let's just go ahead and draw this out, okay? Let's just look at this so you guys can get a visual image of this. So here's your cup that I keep talking about, okay? Let's go ahead and change that Wyckoff line. Let's change that to same color so you can see this. Here's your cup and handle. And what you're doing here is a VCP. This is a volatility compression pattern. You can see this very easily now in the daily time frame. Let me get my brush. You see your compression waves. You have a deeper wave, and then you have a shallower wave. You want these waves to get shallower. They usually come in 3 to 5 waves, and you get an explosion upwards in a bullish situation, okay? So this is what you want. This is a bullish pattern. It is forming bullish, but you're getting that same resistance at the 618 at 24K because that is the weekly time frame 233. So you got to get above that. And again, if you can get above that, let's look at the Caterpillar. If you can get above that, you got your targets, guys. That 28,966 here on the daily time frame, the projection, the 1618 is about 29,386. So basically the high 28, low 29 is your first primary target if you can get up to that level. And if you look at the Caterpillar, guys, the compression is tightening even more. See it? It's tightening even more. Let's look at another indicator here for compression. ATR. You OGs to this channel know I use the ATR a lot. The ATR just measures volatility, okay? Wells developed this, same guy that developed the RSI. But this indicator is so much better in my opinion. The ATR is getting super low. It hasn't been this low. If you look at this, you have to go way back to the beginning of the bull run when the ATR got this low, okay? So the ATR is descending. So volatility is compressing. You're going to see a move, guys. It's just a matter of time. And that move, again, I do believe will be a short clearing move, a short squeeze move based off this cup and handle pattern. Depending who you watch, they're going to tell you this is Bitcoin going to 200K. My God, we've been waiting for this. I get that, guys. I get it. But again, for me, you got to get above this. You got to get above the 200, 233, basically at the 2618, around 34K. Doesn't mean you can't trade the breakout, guys. I have no problem trading the breakout. This is not the breakout yet. You are compressing. So when we get some candles and we get a pullback, a retest, and Wyckoff, I'm going to be looking to post trades, and we'll be talking about it on this channel. But right now, you're in an area that could fail. If the markets start to roll first, Bitcoin could easily roll down after them, okay? If the markets take some time here to pump up to their top, to make their top, and then to roll, Bitcoin has this move, and it's doing exactly what it should be doing. You're getting compression here in your wave patterns, okay? You're getting compression up against the point of resistance, which is the handle. So this is exactly what you want with volatility compressing. And you want these numbers typically to be cut in half, okay? So you got 14.59 to 7.5 essentially. This next wave may be 3.5, 4.5. You want these waves to get tighter. You got 2 waves. This will be your next wave coming down here, okay? Or it could punch up from here. So let's see how this plays out. But again, I'm going to look for that retest. You'll probably get that retest off that 150. That would make sense. You pump up, you hit the 150, and then you roll back over and you look to make your shallow cup and do this, okay? This will be totally tradable if we get this. So we'll see how this happens, but this has to happen in confluence with the other marketplaces. If the other marketplaces are declining, I'm probably not going to long this if it looks to break out because it's going to be a quick pump and dump, I think. If the other markets can hold on for a little bit longer, then this could be a very nice trade. Even up to the 45 would be 27, 28K. Depends where it does because this is an ascending line, okay? So just keep that in mind when you guys are looking to trade these assets. Let's look at Ethereum. Ethereum broke out here and it's looking to do this. Remember, we're on top of Wyckoff now. What you want to do is come back, get a retest, hold this range, get some volatility compression, and then move up. Okay, that's what you're looking to do with Ethereum as well. All right, guys, almost 14 minutes. I got this one out pretty fast. Sorry for the late video, guys. Like I said, the AC went out on half the house. Had the AC guy coming out, had a crazy busy day. Tomorrow, video will be out earlier around lunchtime. So enjoy, and we will get into the nitty gritty again tomorrow, guys. Have a fantastic evening.